Welcome to the Disruptance Podcast. The Disruptance Podcast is the show that disrupts the way entrepreneurs think to make them more profitable and impactful. Rethink tired and outdated business norms to welcome innovation and unlock your unlimited possibilities. Here are your hosts, Eric Forney and Greg Fowler.
Eric, what's going on? Good to see you again for another episode of Disruptance, my friend. And today, we're going to pick up where we left off on the last episode. Okay. And you remember that it was kind of a hot take, Eric in the hot seat episode. And one of the questions that was in there, I asked you something along the lines of, if you won $10 million, what would you do with it? And your initial response was the first thing that you would do with it is go into Bitcoin, invest in Bitcoin in some form or fashion.
Of course.
I think that's
everyone gives. Yes, go ahead.
That begs the question, why did you say that? Where's your head behind that? The whole cryptocurrency life and world, from an investment standpoint to utilization, what is it? Like everything in between. I think it's just going to be a great episode. So that's what we're going to talk about today, my friend. Okay. So let's knock it out. Let's start wherever you want.
I can't wait. There's like a good polarizing topic to talk about then, right? It's kind of interesting. Everybody has their own feelings about it. And I say feelings because most people are uninformed or misinformed on the topic. And here's the interesting thing too, Greg, is that at the end of the day, money is a story. And money is a story, and the story is worth whatever the people believe that the story and the value is worth. And so there's someone who's like pushing up their pocket protector and their thick rimmed glasses who's going, well, that's not true, Eric. Money is an exchange of value. And sure, that might be the case, right? That if you think about money, it's of course the exchange of value and many other things. And yet, at the end of the day, when you think about money in America, we have this amazing benefit of being the world's reserve currency, where the majority of global transactions take place in the U.S. dollar. And most around the globe have full faith in the American government and the American credit system. And that's a story. Faith is nothing more than the belief that the future will be similar to the present, or that the future will look like a way that we believe that it will look in the future. And the reality of it is that anything could happen, of course, to the U.S. dollar, to the U.S. economy. We could experience some tragedy, and that could disrupt the faith in the U.S. government and the U.S. dollar. But At the end of the day, the only thing that it's backed by is a story, a bald eagle, and some bullets, and probably some bourbon, and that becomes the U.S. dollar. And so money's a story. And so the reason why I think it's fascinating that we say misinformed or uninformed is because at the end of the day, money's a story. And so the story you believe about Bitcoin is how you feel about its value.
Wow. But as you mentioned that, though, Eric, it begs the question of so many people that are tuning into this. And I know that so many are educated and they know, but there's also a large portion of the population that really doesn't understand it. And, there's all kinds of things that you see and hear on the news or just, kind of cooler talk conversations. But I really want to get down to it. I mean, you're very versed in this, and I would love to get the audience perspective on truly what it is and kind of breaking down the timeline and lineage of cryptocurrency and kind of getting into the nitty gritty details and how it actually has made a massive shift and change into just currencies in general and, the human condition. So,
well, let's start then, Greg, with understanding like what is money or what is currency, right? Sure. And so let's tackle currency for fun. So currency, if you're a prisoner, currency might be cigarettes, toilet wine, it might be a cell phone, it might be anything that you've decided is a common item that can be exchanged for another good or for another service.
Sure.
And history has an interesting relationship with currency. Because quite literally the first currencies were the barter system, right? And so, 6,000 years ago, you're walking on your knuckles and you're bartering, you're trading goods and services. And, we've seen all kinds of things that have been traded along the historical timeline here. We've seen, tulips that were seen as a form of currency. We've seen big rocks of salt, and we've seen stones, and then of course along comes silver and gold. And for the most of the modern history, the accepted currency has been silver or gold. And there's a couple of reasons why. The reasons why silver and gold have been the accepted de facto currency for the last couple of millennia has been because, one, you can prove that there's authenticity. You can validate the fact that it's genuinely either silver or genuinely gold. Right. There's, you as a kid know all about fool's gold, right? And there's obviously a way to test molecularly whether you have authentic gold. And so as a byproduct, there was the way to prove that the value or that the item was still intact and was still as you paid for it. And so it had some verifiability, and then it had durability as well. As in, if you were exchanging cigarettes or peanut butter and jelly sandwiches, at some point in time, they're going to turn into mold, and they're going to wither away into nothing, and that's not a great storehold of value.
Definitely not.
And so the challenge became for society is that silver and gold also were portable. Silver is a little bit more lightweight than gold, but it's challenging to scale the southern border wall with pockets and pants full of gold bars.
Sure.
So it's certainly more portable than exchanging a cow or a camel, but it's not quite as portable as digital money. So at least at one point in time, gold coins or silver coins were a common currency because you could put them in your pocket, you could carry them on you. And you could take them with you. So you always had money or currency where you went.
Sure.
And when you understand that money then starts to meet these requirements in order to be considered a good, valuable storehold of wealth and a good medium of exchange, what we think of today as Americans is digital money. Very few of us are carrying cash. Now, I know you probably show up, Greg, most of the time with a duffel bag full of money like Floyd Mayweather, but the rest of us
backpack.
The rest of us, we're just bringing Amex with us, right? And so most of the American money is just digital ones and zeros. And that makes it really portable. It makes it widely recognized. It makes it verifiable. For the most part, at least today, digital ones and zeros are a lot more verifiable than checks were 50 years ago.
Okay.
And so we in America think of digital money for the most part as the currency of today.
Okay.
Here's how we verify it, though, Greg. This is where the story of Bitcoin starts to come into play. The way that we verify money today is by using a trusted third party. So anytime that you want to get money, and it's not you and I just exchanging some dollar bills, if you want to, if I want to pay you, tap to pay on your little Square receiver on your phone, at some point in time, that money is going to go to your bank account, or it's going to go into Square, and then it's going to go to your bank account. You're putting your faith and trust in that bank account that when you receive money from my tap to pay, that it will be in your account either within a few minutes, within a few seconds, or a few days. Now, if within the past 12 months you were banking at Silicon Valley Bank or one of the others that happened to implode in the past 12 months, all of a sudden you put yourself at a significant risk with that trusted third party. It was quite possible for many of the businesses who were putting their trust and faith in that third party, that the money, the millions and tens of millions they had weren't there because the bank didn't have the money to liquidate all of the customer funds. And so the challenge we have with digital money is that in America, we've been blessed, thankfully, with an economic system that hasn't significantly imploded and caused runs on banks in our recent lifetime. But in the past 12 months, we've seen that it happened on at least more than one occasion. It's the third party that becomes vulnerable in America.
And the whole thought as you're painting that picture, though, Eric, is it so? Are we telling everybody to take our money, cash money, put it in the mattress? Are we having safes in our houses? Like, what is the takeaway behind that? I mean, is anything truly safe? What's the thought there?
So the lead up to that is, I think the interesting thing is one of the things I find with Bitcoin is it's the greatest story ever told, and the reason why I say that is because, if you think back to, before you had facial hair, it was you were rioting on Wall Street, and you were pissed off at the greedy fat cat bankers, Greg, because they had sold you and the American public upstream during the global recession of 2007, 8, 9, right? And so what happened, of course, as you think back to the time of 2007, 8, and 9, is that the trusted third-party bank institutions in America were running their business in a way that was questionable at best, illegal in many cases.
Sure.
And as a byproduct, a number of people lost their homes, their livelihood, and many of them even took their own lives. And as a byproduct of that, there's this group of people on the internet who said, hey, we think society could be better. We think that society could have a better way of exchanging money without ever having to rely on Wall Street or on a banker. Because history tells us that every currency that's ever existed other than silver and gold has disappeared over a long enough time frame. And that over a long enough period of time that banks will also have their own liquidity challenges or runs on banks. And so there's a group of people on the internet who says, you know what, we think that we could get rid of banks, and that we could give power back to the people, and that we could democratize money without the need for an intermediary middleman. Wow. And that becomes the genesis of Bitcoin. Now, what amounts to be 15 years ago, quite literally almost 15 years ago to the day, was the Genesis block of Bitcoin. And it started out of the premise that money could be decentralized and controlled and owned by no one except for the people. The democracy of money.
Now, why is that? Why would that be a good thing or a bad thing? Either way, I mean, what's your perspective?
Yeah, let's take both sides of the argument. Which, by the way, is a great idea, because most people I find don't take both. Their emotions about the topic are typically on one side or the other.
Yeah, exactly.
And so let's take both. Let's argue against both angles. So as an American, you can make a really strong argument that says that there's no good use case for Bitcoin. Because if you're buying Bitcoin, you're investing in the future failure of America. You could make a decent argument to that, because you're saying, hey, look, I'm buying an insurance plan that the US dollar will, over the course of my lifetime, implode. And as a byproduct, this is my schmuck insurance, right? I've got gold bars in my basement. Yeah. I've got bullets, and I've got Bitcoin.
There you go.
And by the way, there's a whole segment of the world that has that belief. They're called preppers for the most part, right? And they want to be prepared for the worst.
Sure.
And so you can make an argument that in America there's not a good use case for Bitcoin. And I think that's a fair argument, by the way.
Sure. Yeah.
The counter argument to it is, you could say, hey, I've studied history, and I think that I'm Team America, and I'm Team Insurance. And you could say, I've studied history, and given enough time, I know that man will gravitate over a course of time to a bit of corruption and a shift of power. And at some point in the future, there will be a shift of power and an ounce of corruption. And as a byproduct of that, this is an insurance policy against what that I believe the future will look like history.
Wow. But breaking down the duality with that, Eric, I think it lends perspective. And whoever's tuning into this right now, you're going to be on one side or the other, but hopefully that gave some context into this. And as you're going through exchanging of, truly what currency is and kind of the lineage of the story behind it, before we get into the crypto story, which again, super fascinated behind this, that I think resonates with a lot of individuals as this progresses into life to where we are today. I would beg the question, anybody who's listening to this, think about how you spend your money. And you'd said it earlier. I mean, making a joke out of it, saying, "Hey, duffel bags or backpacks of
Yeah.
cash." I mean, I very rarely carry cash. I mean, and there's very few
Yeah.
places at the end of the day where they're cash only establishments for the most part.
Good
Everything is
strip clubs, and you don't need to be going to those gentlemen clubs anymore. Right?
that's right. Another day. Hey, another episode, Eric.
Okay, got it. Got it.
Good habits, bad habits. Where you really spend your money, but it's
My
not the
mother listens. Greg, don't tell her.
it's
Come
not the
on.
laundromat. It's not the laundromat. But I think that's really set the stage, because think of all
Yeah.
the online, the e-commerce, the way
Yeah.
that you Amazons and the way that you're, transportation, things along those lines. You're not really handing out paper money like you used to. So in this case, and this is kind of my argument, and again, I'm a novice to the crypto world. Eric, you're the master here. So for me, breaking it down, as far as I'm concerned, everything is digitized as it is. And I don't
Mhm.
have my money out of the bank in my mattress. So I think that that's an important thing. It's just a bunch of zeros.
Yeah.
And, I think that that's an important note to say in transition to the story of crypto, to put perspective onto people's thought. If they didn't know this already, I just wanted to glaze
Yeah.
over that, Eric. So, how did it start? What was, so
Yeah.
you said 15 years ago? I mean, this was going through. I didn't
Yep.
know it started 15 years ago. So what's kind of the story behind that has shifted to a
Yeah.
different phase of exchange of currencies? What does that look like?
Yeah. So, it's kind of interesting because this is super, super nerdy, but, just so happens that I was listening to the story of this the other day. But, oddly enough, your phone and your computer and almost everything you have digitally that has access to the internet has encryption. And there was a point in time when the US government categorized encryption as a munition
Hmm.
or as a weapon. And they said that if you're going to try to encrypt anything, you're trying to use a weapon that would be either you're trying to conceal or make private your hate speech, your weaponry, your anything that you might not want the U.S. government to have access to.
Sure.
They said you can't have encryption that they can't access. Okay, so at one point in time, they came along and said this is against the law. It has to be categorized. Encryption has to be categorized as a munition.
Wow.
And that case went all the way to the Supreme Court. And at one point in time, thankfully, the Supreme Court ruled that it's actually encryption is mathematics and ones and zeros,
Hmm.
and and speech in America is protected.
Hmm.
And so because you could print out the code of the ones and zeros in mathematics involved in encryption, it couldn't be regulated, or
Hmm.
it couldn't be suppressed or censored because it was merely speech.
Hmm.
And thankfully in America we have the freedom of speech.
America.
And
That's important.
right. And so the interesting thing is that now you think of all of the innovation that encryption has allowed for. Again, you probably wouldn't have cell phones the way that you do. You certainly wouldn't do online banking because there's no way that if you didn't have an encrypted service, you'd be sending payments online or putting in your credit card number and so on.
Mm-hmm.
And so the same group whose work, the same math nerds and on online, hackers and those interested in encryption were similarly interested in thinking about how to have money that could be transmitted with encryption in a way without needing banks. And so it starts at this genesis that if math was the truth and the only real true science, if math is the only true science of the world, then is it possible that we could utilize math and encryption in order to create money without the need for a bank? And so that starts that takes place then in what amounts to be about 15 years ago in early 2009. And so the first Bitcoins get mined under the pseudonym of Satoshi Nakamoto. And why I say that Bitcoin's the greatest story. One, it's kind of like, to me, one of the most fascinating American stories. It's democracy, it's freedom, it's that we the people have access and control over our own finances and our own assets. And Satoshi Nakamoto, the person or persons who are given credit for creating the code and the concept, mined several tens of thousands of Bitcoin and then abruptly disappeared, never to be heard from again. And the initial Satoshi wallet and the Satoshi Bitcoins have never been spent and never been cashed in, despite at one point being worth about $65 billion.
Wow.
There's never been the access to them to spend. The like a superhero in the midst of midnight at Gotham City disappears and leaves the people with no more than 21 million Bitcoin, and that initial Genesis block is never to be used again. And so it's a fascinating story when you think about the fact that someone believed so much in the mission. When you think about what's the correlation to business, it's fascinating because here is a group of people that are doing something that could have been seen as illegal, competing with the U.S. dollar.
Sure.
And then they do so because they believe that the mission and the vision is so worth taking up arms for, that even when given the choice of cashing in $65 billion, they opt instead to be mission oriented only. And so the thought is that there's not been any economic benefit from doing that, despite the fact that it's nearly a $1 trillion asset today.
That to me is incredible. And when you say person or persons who developed Bitcoin, so is it like what do you call that? A pseudonym or pseudonym?
Yeah.
So no one knows who these people are.
Yeah, I mean, no one knows who Batman is, Greg. I mean, if it weren't like we think it's Bruce Wayne, but the reality is we've not seen Bruce Wayne and Batman together, and we've not seen them, just change. We've not seen Bruce Wayne change before. We've seen Bruce Wayne go in somewhere, but we've not actually seen the event itself. And so
you mentioned that it's not like Superman, or Clark Kent getting into a telephone booth and then Superman getting out of there. It's the similarities into that.
Yep. And so the belief is that at the time the persons that had authored the initial Bitcoin white paper authored the paper under the name Satoshi Nakamoto, and then participated in online chats. This is 2007, so you got to remember 2000 probably. Well, this went on for several years, but let's call it mid to early 2000s.
Wow.
So there isn't the same. There's not the ability to get on a Zoom and talk about strategy for cryptography. Instead, it was message boards and white papers, or message boards and emails.
Wow.
And as a byproduct, at this point in time, no one has seen the real life Satoshi, or no one knows the actual identity of the real life Satoshi.
Crazy.
And if they do, they aren't saying. And there are plenty of theories, but at this point in time, there's no one who's been identified as that person or person.
Any theories that you like to dabble in with that? I guess so. The question is not so much why or who it all started, but where are they now? Why have they just left it? We're talking about somebody got wrapped up in a trunk and driven off a bridge? What?
I doubt it. But
okay.
It is interesting. One of the key figures in the initial like vision and project was a guy by the name of Hal Finney. Hal Finney came down with ALS not long after the initial mining of the first Bitcoin. And it's thought that Hal Finney lived within a radius, a decently close proximity of where the Satoshi Nakamoto had been at least logging some sort of internet activity. So there's plenty of theories that it could have been Hal Finney, and Hal Finney is now, of course, dead.
Okay.
And so it's quite the probably best possibility, the best and most likely probability is that person or persons is no longer alive, or those who have access to the accounts are no longer alive and accessible.
Okay. And And that's just such a fascinating story. I mean, to set the stage with a lot. But Eric, before we dive a little bit deeper, because there's a lot of questions that I know that I'm thinking, as well as the audience tuning into this as well. There's a lot
It'll
of
be like
terms.
a 4-hour podcast, isn't it? I can already
This is going to be great. This is, you think of it, you're welcome, everybody. But this is like a master course breakdown of cryptocurrency and just exchanges. And I love this. I mean, it's fascinating stuff, Eric. But there's so much to take away for people to understand. Just like anything new that you don't know, and if it's something that you're starting to find yourself get lost in, it's just simple explanations of terminology. So, like you had mentioned, mining.
Yeah.
I mean, there's digital wallets,
Mhm.
there's mining, there's blockchain. I mean, a
Yeah.
lot of people have heard these terms. So just as you're going through it, Eric, remember that us mere mortals who are tuning into this, just remind us of some of those, kind of things and what it means. And that way we kind of follow down the story.
Let me give you the perfect. Let me give you what I hope will be the perfect analogy and explanation to kind of start to understand all of it. So, two concepts to understand: gold and chain of title.
Okay.
So, if you own a home or you know someone that owns a home, and you've ever known gold or touched gold or you own some yourself, then you can understand Bitcoin if you keep it high level enough. Okay, so. When we think about blockchain, I think it makes sense to understand how the chain of ownership works for the title of your car and the title for your house.
Okay.
If you were not the first owner of your house, Greg, you worked in title, right?
Mm-hmm.
And so even if you were the first owner of your house, doesn't matter. You weren't the first person to own your home, believe it or not. It was a high probability that someone owned the land and the home prior to you owning it.
For sure.
In order to transfer the ownership from the previous owner to you, there was a chain of title. Mm-hmm. That chain is recorded on a piece of paper at somewhere, and then ideally transferred or recorded or noted with the county that you live in. Mm-hmm. That is the most ass backwards, like antique process on the planet, right? Someone writing down the chain of ownership from one owner to the next, and then logging it in some master database within the county. Okay, so that's at one point in time, the process of ownership was a written log, better said, a written ledger. Ledger is just a log. At some point in time, you could go to the county and you could verify that your name was on that ledger as the rightful owner of the property. Okay, so now that's physical chain. Yeah. If you were going to digitize it, then you would need to the Bitcoiners came along and said is, well, if we were going to digitize chain of ownership or chain of title, we would need to do so in a way that was indisputable by the world and by everyone. Okay. Well, how could we do that? Well, what if we sent a copy of the ledger instead of sending it to the county? What if we sent everyone in the world a copy of the ledger at any point in time, any day, anywhere, 24/7, 365, anyone in the world could see a copy of that ledger to verify its ownership and its chain of title. Okay. And so that became, then they said, okay, well, we would have a distributed ledger. Okay. And then we would have it be verified with mathematics. And we would use math to confirm that the chain wasn't broken. Wow. Okay. And they said, okay, well, we would then link the house was passed from Greg to Sally and then to Joe. Okay. And with every added chain every added link to that chain, there would be a math problem that would need to be solved in order to add the new link onto the chain. Perfect. And the way that it would be verified is that computers would compete to try to solve the math problem that was necessary in order to add the additional link to that chain of title from Greg to Sally to Joe. And so all of this distributed network of computers would all try to process the math required to verify what's necessary to add the link to that chain. And once the math problem was solved, we would reward the computer that solved the math problem. by giving them a Bitcoin, a portion of a Bitcoin as a reward for solving the math that's necessary to link those chains together.
Interesting. Okay.
So those became the blocks, the chains that were required, the blockchain that was necessary in order to validate that someone has ownership.
Wow.
And then at any point in time, then the ledger, the log of ownership would be distributed worldwide. Anyone could check. And because the computers compete to try to solve the math problem in order to earn the reward of the Bitcoin, then the more people who compete the more computers that compete on the math problem, the harder it will be, the more difficult it will be to solve the math problem.
Which is good.
Because it will be competitive. That's right. So more people trying to solve one math problem means that not everyone, it's like a game of musical chairs. Well, if you have one chair and you have 100 participants, it's going to get violent.
Going to get rough.
And if you had a really big reward, it'd be like a Mr. Beast game. You'd have like Squid Games, right? And you'd have all these people willing to do ridiculous shit to win one grand prize. Well, that's the game theory that's baked into Bitcoin, is that every 10 minutes people compete to solve a specific number of problems in order to win a specific prize. And the more computers participating in that math problem, the increase the difficulty of actually getting a reward every so often. That's the mining component of it, is every so many minutes, a reward is mined by a computer solving math problems.
Wow. Huge.
The more computers there are competing to solve problems, the more difficult the probability of getting a reward is, which makes the reward scarce. Okay. And so it's just like the game of musical chairs. If there's 100 participants in one chair, that chair is really scarce. It just so happens baked into the computer code for Bitcoin is there's 21 million coins to be mined ever.
Wow.
And at 21 million, no more. Every 4 years, the math problems get incrementally more difficult.
Wow.
And so as they get more difficult, it becomes more challenging to solve the problems. The rewards become more valuable. So it's interesting in that the way that this has been configured to where, and you think about it, you're trying to keep the world honest.
Sure.
You're trying to create a math scenario of game theory where everyone has to tell the truth and there's no way to cheat the system. And so the way to do that was to democratize information and then use math as the only source of truth and have it run 24/7 and with high rewards, so that if you tried to cheat the system, you would actually lose money.
Wow.
And the reason why is these aren't computers anymore, like the laptop that we're on.
Sure.
These are like multi-$1,000 computers that require thousands of dollars worth of energy every month in order to run. And it takes you have to get rewards in order to pay off the energy and the computer hardware that you paid for. So trying to cheat the system actually causes you to lose money.
Wow. Because
you invest money into the hardware and you invest money into the energy. Therefore, therefore your odds of actually losing money or losing time invested go up because energy costs are high, the equipment costs are high, and so on. There's also some other layers of verification involved, but we don't have to go that nerdy on it. So that kind of gives you a little bit of blockchain and mining, hopefully.
That was great. I mean, to me, as you explained that, Eric, super simplistically is, the blockchain is that ledger, right? And it's a digitized ledger. And I love the fact that when you talk about a piece of real estate property exchanging of hands, then that ledger is changed. And I almost think of the clerk and recorder as somebody there getting compensated for doing the paperwork.
That's right.
So you have a great example of a digitized, and the individual that is mining that or making the exchanges, doing the mathematics, is then rewarded. So I think that's such a beautiful explanation of the actual blockchain and how that works, and then also mining. And as you mentioned mining, I think that was a really interesting thing, and I forgot where I saw this, but there's an island, right? There's a certain island that a lot of this mining happens.
El Salvador's made it a legal tender there, and they're working on doing mining with volcano energy through geothermal. Texas has a good chunk of miners as well because the energy grid in Texas is apparently pretty cost effective. So, with what there's the interesting thing about business is that the parallels to Bitcoin as well are fascinating. So the interesting thing about business and really in life is that is the concept of game theory. If you believe like Charlie Munger says that you show me the outcome or you show me the incentive and I'll show you the outcome. The belief is that people do things they're incentivized to do, or incentives drive behavior. Well, the concept of game theory is often thought of as how do you design a game that incentivizes all of the participants to do the rational, ethical behavior in order to get the rational, ethical outcome. And so you want to engineer social systems, business systems, democracies, peer groups, as many things as possible so that you get this game theory of how do I get people to act in their best interest and in the group's interest so that everybody wins in the end.
Wow.
Well, there are ways to do that terribly. And then engineering systems to get people to act in their interest and in the group's interest is usually requires intelligent design. And so when you think about the ways that they've built game theory into this is that the cost of energy or electricity drives the location and competitiveness of where people choose to mine Bitcoin. So, for instance, China banned Bitcoin over the last few years, and people who were mining Bitcoin in China picked up their miners and they took them to Kazakhstan. And so they went across the border and they said, okay, fine, we'll take our money and our taxes and the businesses that we have, and we'll move them out of the country. No problem. We'll go to a country that is mining friendly. And so what we know about governments is that governments want business, they want taxes, and they over time choose to act with the incentive of money. And so the thought is that so long as there's internet access and there are humans who need taxes and money and income, there will always be the ability for miners to pick up and move and continue to solve math problems to secure the network and make the currency worth something.
I had no idea. I had no idea that it took that much energy. I mean, so is it a concern? I mean, people are looking at it as what's the impact on the environment? I mean, is it that sort of deal with the amount of energy that's consumed?
So that's an interesting topic that's kind of controversial, but it's becoming less controversial. And so remember the difficulty of the problems gets incrementally more challenging.
Sure.
Originally, you could actually mine Bitcoins on your laptop. If you did, 15 years ago, you would have so much money we wouldn't do this podcast. And so, because they were easy to do on a laptop. And in fact, someone bought a pizza for I want to say 10,000 Bitcoins or 1,000 Bitcoins, something to that effect. And at one point, and it was the first ever transaction. And so. Because it becomes incrementally more difficult, and the difficulty is scheduled to increase in the next 80 days. It becomes more power intensive. But as it becomes more power intensive, it requires more innovation by people who've invested a lot of money into their business and into their mining equipment.
Wow.
So the fact that more energy is required to get less reward means that the business has to figure out a way to get energy costs lower.
Wow.
Well, how do they get energy costs lower? They typically then need to look at how can you get renewable resources? How can you make innovation strides with energy? So what that's why El Salvador is looking at, can they use their volcanoes to generate geothermal energy? Elon Musk and Jack Dorsey have been looking at, can they do solar and other renewables to mine in Texas? Gas flaring, which is like just what amounts to be like surplus overflow of natural gas. Some companies are capturing and then reusing to mine to provide energy to mine for. So
Crazy.
The game theory component and the incentives and rewards actually are driving innovation in clean energy.
Wow.
But that's not a good news headline. And so remember, news headlines want to tell you all the terrible things, but what you'll never find is a headline that tells you the cost of energy and the energy requirements to run the US banking system or the global banking system. You can find the energy requirements to run the Bitcoin network, however, and because that makes a better headline.
Well, and you and I have had this discussion before. As the news in and of itself is tough.
Yeah.
It's just a tough pill to swallow under any circumstances. You just look at the headlines and they're horrible. And that's any topic you can imagine. You just break it down, and I'm sure crypto is no different. When it comes to that. But Eric, I guess want to ask you this because there's so many different variations. So as far as, I mean, I don't know if this stat is accurate, but over 4,000 different cryptos.
There's 12,000 as of today.
12,000.
Yeah, there's a little more than 12,000 today. Yeah.
Wow.
There's probably more than that, but there's 12,000 recognized. Yeah.
So what's your favorite? I mean, people that are tuning into this, I think, all jokes aside, I mean, where do you, how do you determine, or what are your thoughts if somebody's looking into this? Like, what's the difference between one or the other?
Yeah.
What do you look for? I mean, we're not giving investment advice. We're not saying anything along those lines, but I'm just curious. It's because there's 12,000 plus.
Yeah.
So how do you figure that out?
Okay. So, first we understand that like there's Bitcoin and then there's everything else.
Okay.
And what makes Bitcoin different is it's the equivalent of like gold versus plastic.
Okay.
Is gold or plastic more valuable? I don't actually have the right answer for you because you've got gold in your phone and you have plastic in that you're using in everything that you do in life. So one is less valuable than the other depending on its use case, but they serve different uses. And so understanding that the current like value or what distinguishes Bitcoin is that no one has any central control of it. It's democratized. It's the most ownership is something like 3% of the current stock, and the thought is about 6 million coins are missing anyway, and out of circulation. So the scarcity and the fact that it's not controlled make Bitcoin a value of what's believed to be a storeholder value, similar to how gold would be. Okay. The difference between gold and Bitcoin is that you can, go to space and get gold from asteroids and from other planets, or you can continue every year to mine for gold, and that causes the supply to go up every year, which means that's inflation. So it makes the current gold supply worth a little bit less because there's always more supply. Whereas Bitcoin stops at 21 million, no more. So Bitcoin, think of it as digital gold. The other cryptos serve different purposes.
Okay.
And they all have stories attached to them for the most part. And they're all aiming to try to do something different. Okay. And for the most part. So second most popular one is Ethereum. Ethereum was intended to act more like maybe like Visa would be. If you think about it, Visa is not a bank, but it is a transaction layer for banks. It allowed you to move money or to move value on a network. So Ethereum's initial goal was to create the movement of value in a more efficient way than Bitcoin.
Now, is that a movement of value to say, hey, I want to go and buy groceries?
It could be. Yes, funny enough, it could be. So, oddly enough, You can actually exchange. I currently have it. Did this yesterday.
Mhm.
I have US dollars on the. I don't have them on Ethereum because it's kind of expensive, but I
Okay.
have. I don't have. So let's say I have US dollars on Ethereum.
Okay.
I can send you the equivalent of US dollars on the Ethereum network
Hmm.
in what's called USDC or USDT.
Oh.
And you could get it. Here's the difference is between me sending you money on Ethereum and me sending you money to your bank
Mhm.
is you get the money on Ethereum within 2 minutes.
Mm.
You get the money within a week when I send it to you at your bank.
Yeah.
Okay.
Yeah.
So when it's final in crypto. When it's only final at your bank when your bank decides not to call it back from me if you complain about it.
Right.
And that's good and bad, by the way.
Yeah. Yeah.
Like if I send it to the wrong address at your bank and your bank and I call your bank and I go, hey, I sent money to the wrong Greg,
Uh-huh.
then they're going to refund it. And that's awesome because I screwed up and I got my money back.
Sure.
Now, if I sent you money and you gave me the product or the services and I said, hey, Greg stole money from me. I didn't send money to Greg. That guy's a crook. I didn't do any business with him. Then they might refund the money and I might have actually stolen it from you.
Wow.
And so it works both ways, right?
Sure.
But in blockchain, when I send it, it's gone.
Wow.
Whether you get it or not, it's gone. So if I send it to the wrong address, the wrong account, then I send it to the wrong account. Once you receive it, you receive it, which is why when you receive it in 2 minutes, it's yours.
Got it.
And so it's a one-way door. There's no going back. Good and bad.
I was gonna say, yeah, positive and negative into that.
If you were putting your house on there, you would want that.
That's true. That is very true.
So, unless it got sent to someone else's house or someone else's address, but for the most part, like there are some assets that in theory you would want to have on a one-way ownership.
Okay.
And the difference becomes is, for the most part, if someone was looking at getting into all the different cryptos, the ones that are worth paying attention to are what's called layer ones. The equivalent of kind of a MasterCard, a Visa, an American Express.
Okay.
Those that have the intention to be a base layer of network exchange. Those are the ones that typically then have the opportunity to be more valuable with the lower possibility of scam.
Got that. Okay.
Because anyone can start their own blockchain tomorrow. It's just code. Wow. So you and I could start the Disruptance coin and the Disruptance network, and we could start our own blockchain, and we could mine 10,000 Disruptance tokens, and we could own 990 of them, and we could sell 10 of them, and then we could sell 10 of them for a decent amount of money, and then we could walk away with the. We could sell the other 99.90 and screw the 10 people who paid for the token.
No.
We could sell our tokens at an inflated price and leave everyone who still has them with a worthless token or a worthless coin.
Now we would never do that, though.
We would not do
especially with the Disruptance
That's
coin.
right.
I could see it just like the bees on your shirt.
Yes.
But like DuckTales with a D instead. Right. So the Disruptance, that'd be incredible, man. I'm down for that.
So that's the risk is that when, remember, the point of digital assets or of blockchain or what became cryptocurrency is that it was to democratize value and money with no central owner. And the risk is that when you have central owners, you have bad actors. And so typically what a lot of people want to look at is what's the distribution? Is it largely owned by a few people? If so, the risk is much higher than if it's owned by very few people.
Okay. And that makes a lot of sense because people talk about, and again, just headlines, it's just the way that it is, volatility. Well, I mean, there's volatility in anything, in everything.
Yeah.
So what's your perspective on what we're talking about and the association with volatility?
Well, I mean, dude, I've lost more money than I care to count, and so the interesting thing is, it's kind of the price. It's like the price of tuition,
Yeah.
um, and um, and I've also earned it back.
Mm,
And so, the thing about it is, like, if if I buy the S&P 500 and the Nasdaq and other indexes, 2022 I lost my ass on my investments, and by the end of 23 I had made it back.
sure.
And so much of it is determined by how long you plan to believe in something and hold it.
Mm,
And
okay.
if you don't, kind of to take the Warren Buffett and Naval Ravikant methodology and blend them together, I would say if you don't plan to own something for 10 years, don't own it for 10 minutes.
Ooh. Love
You're
that.
you're gambling otherwise.
Mm,
And so if you're planning to gamble, then plan to gamble on something that you have some degree of control or some probability over, or
mm.
just do so for the fun of it.
Wow.
Because you could buy lottery tickets, go to the casino, or buy other ways to gamble. But greed is a powerful force that
Hmm.
drives society, and so a good chunk of the volatility is a byproduct of greed,
Hmm.
and secondarily a byproduct of fear. So
Wow.
every market cycle is always driven by psychology of investors,
Mm,
and the psychology of the digital asset market is driven by the 4-year cycle of Bitcoin, and the
okay.
belief that every 4 years the value of Bitcoin goes up.
Hmm.
And so what happens is it works. So far it's worked in a 4-year cycle.
Okay.
It goes up and then it goes down,
Mm,
and then it goes up by more than it goes down by,
mm.
and it goes down again, right? So about an 80% drop from its peak is about average.
Okay.
So $70,000 went down to 16,000,
Mm.
or roughly 70 to 16, and so you have to be willing to ride the roller coaster on that hell of a ride,
Wow.
um, when and that takes some conviction.
I would say so too. And everybody has their tolerance, right? There's risk tolerance in investments and anything along those lines. And I love that adage that you mentioned, 10 minutes or 10 years, right? I think that that's something to stick with in that regard. I think that going down the road with, volatility, or I would say maybe a lesser known sort of scenario. And again, your expertise in this, Eric, is incredible, talking about real estate. So I want to weave that in there because it's come up time and time again through conversations over time as to, exchanging of funds or currencies with real estate. So what's your perspective on that? Anybody who's tuning into this that happens to be a real estate professional,
Yeah.
it might have conversations with people that are heavily invested into cryptocurrency. What does that look like? What's your thoughts on take on it, everything that way?
Yeah, so it's interesting because so Bitcoin gets this reputation of being volatile, and I get that it is. And the way that in economics volatility is measured is through what's called a Sharpe ratio.
Mm.
And so when you look at the Sharpe ratio of Bitcoin, the interesting thing is that if you had over the past 3 years, 5 years, and 10 years, if you had a 3% investment in Bitcoin, you would have seen a significant improvement in the returns of the typical American investment portfolio.
Uh-huh.
And so even just a 3% investment would have caused most people's portfolio to have substantially outperformed even the best hedge funds. Now, it may not have outperformed Congress, but that's okay. They're just so good at trading and investing. It's almost impossible.
Right.
But the professionals, you would have outperformed certainly over the past 10 years with a minor allocation. And so it's understanding then what's the ratio of how much risk you can take
Mhm.
versus what the potential risk might do to your portfolio.
Mm.
And the mantra is you really don't want to invest more than you are willing to lose.
Yeah.
So if it goes to zero tomorrow, are you okay with it going to zero?
Hmm.
And so when you think about then what's the role of real estate with it all is,
Yeah.
we will we will get the dawn of the Bitcoin buyer in late 24 and 25. That'll start to show back up again a little bit. And that's because, again, the market works in 4-year cycles. So people who own a sizable amount will choose to want to know if they can either buy with Bitcoin or cash theirs out and purchase real estate. And, I'll just tell you, those are not real Bitcoiners, Greg. You don't, they're not people you want to do business with.
Wow.
No, I'm just kidding there. So it is an interesting concept because I think it was like you have a scarce asset and you're buying another scarce asset. Well, it would make sense to have a scarce asset and use an abundant asset, US dollars, to buy real estate with. It would make less sense to have something that's scarce and traded in for a less scarce product.
Sure.
If you believe that scarcity or items that are rare go up in value. All we have to know is that the Honest Wagner card, the most expensive baseball card in mankind, goes up in value because of its rarity. To know that human behavior likes things that are scarce, and exchanging scarce items for abundant items is kind of a foolish purchase move. But it will show up again late this year and next year.
Okay. And is that just lack of knowledge on their part? I mean, no disrespect to anybody who's purchasing homes or has it in the past, but you've seen people do it with luxury items, watches, cars, clothes. There's definitely use cases for it. I mean, if you just look up, where is cryptocurrency accepted? It's accepted in a lot of places.
Yeah, for sure. Well, it's not necessarily that it's a misunderstanding or a lack of understanding. It's that, at the end of the day, it's called personal finance because it's personal. And so I'm tongue in cheek in that for some people, if you've made enough money, it might make sense to de-risk your portfolio and move from what amounts to be an asset that goes up and down, potentially 80% to the downside. It might make sense to say, you know what, I've got enough. I'd like to take some off the table. Right. And I'm going to walk out of the casino and park this over here and go live on it or go create generational wealth with it. I'll keep these chips still playing games at the casino. And that's for the individual to make that choice with. I always think about the Warren Buffett quote of that you never want to lose money that you need, chasing money that you chasing returns that you never needed. So if you think about it, it's like, why if you had the money to live on and provide security for your family, and you could put it in the S&P 500 and get 10%. And 10% returns for the rest of your life were more than enough, and you risk it trying to hit a home run with something that might go to zero, you've made a foolish choice because you had all the money you needed, and you jeopardized all the money that you had chasing after money you didn't need.
Wow, powerful. And that to me is huge advice for anybody who's tuning into this. I mean, for any aspect of their life, is to look at that from deep perspective. It's going back to that earlier episode we had. Remember, we had Gordon Gekko on, so he was on there talking about greed is good, and I think that's interesting. Insight, Eric, for sure.
Well, I mean, greed is good and bad, Greg, and that greed can cause innovation, and it also causes bubbles. But at the end of bubbles, at the bottom of bubbles, is where innovation occurs. And so the cycle of greed and fear breeds both innovation and problems. And out of problems breeds innovation. If it weren't for World War II, we wouldn't have had the moon mission. And if it weren't for the Cold War, we wouldn't have put a man in space, and you wouldn't have many of the things that we enjoy today. But it's out of those challenges that man breeds innovation.
I love it. And again, when you were talking about the environment and everything that was going on with energies, just fascinating information, Eric. And this is why I knew this was going to be a really deep episode. And can't you see, everybody, how smart this guy is? It just blows me away. But Eric, and I didn't know if there was any other thing you wanted to kind of dive into with crypto, or any thought process into that. I didn't know if you wanted to tap into NFTs at all.
Ooh,
You
man.
know, if we table that for another episode, or if that correlates into this.
Yeah, I mean, it certainly correlates into it. I'll tell you, it's a topic that I'm still wrestling with the understanding of like what that looks like long term. The answer is probably NFTs probably have a place in the future. It's probably not exactly where they are today, which is probably in the lowest hanging fruit, the sewer of the internet. In that, you know, one of the things that's interesting is that with NFTs, you have the ability to create infalsifiable ownership.
Mhm.
And that can be an interesting thing when you start to think around the idea of AI. And maybe this is a longer conversation. Will lead us there. When you start to think about AI, Greg, one of the things was fascinating is that, just last year, now I just want you to imagine that you had, God forbid, you had ALS. You're basically guaranteed to lose your voice. And so you're still cognitively as good as ever, but you're struggling to be able to communicate voice to voice the way that you could previously. And the amazing thing with AI is that now you have the ability to clone your voice before you lose it, and then you have the ability to, with AI, read and interpret many of your brainwaves and thoughts, and convert what amounts to be now your cloned voice and your thoughts into speech in real time, as if you'd never lost it before. And so that's one of the amazing benefits of the innovation and the developments that we've seen in the past 12 months of AI. Now, we could play the counter argument to that. And the counter argument is that you could also do a ton of nefarious things with your cloned voice if you chose to do so, right? You could, like War of the Worlds style, if you think back to early eras of radio, you could go create pandemonium with cloned voices. You could do, a lot of illegal and illicit activity with cloned voice. NFTs have the ability to start to verify ownership. So as we think about what the future of AI and validating humanity starts to look like, having blockchain or a proof of ownership or proof of humanity will start to play a role in the future, because there will need to be a way to prove your identity, that you're not in fact digital AI Greg in the future.
I was going to say, I'm going to knock on this to see if it's actually Eric or if it's an AI variation. But I think that, to me, is an incredible episode to go through, really what AI is doing and shaping, and the innovations, not just for professionals, but also for personal life and tendencies throughout humanity. I think incredible stuff. And you and I can dive deep down those roads. So maybe we table that one for now, Eric, for sure. But as you mentioned, War of the Worlds, and when I hear that, I'm thinking of the movie with Tom Cruise. I know you weren't necessarily mentioning that one, but all I think of about that movie, obviously with the whole storyline, but I don't know if you've seen it, but he's making like peanut butter sandwiches for his kids. Does this ring a bell at all?
No.
So he's in the kitchen. They're hiding from the aliens and all that stuff in some random person's house. And all he could find is white bread and peanut butter. So he starts spreading peanut butter, and his daughter says something, and he's just very irritated, and he takes this open-ended peanut butter sandwich and throws it with aggression at a window.
Okay.
And it's stuck. And I don't know why, but that scene to me is always just stuck into my head to say, someday I think I want to just spread peanut butter on a piece of white bread and throw it against a window. I have not done it yet, but I don't know why, but it just, for some reason. So you mentioned it triggered a thought, Eric. I had to say it to everybody out there.
What movie? And this movie is this makes you think of the future of AI and robots or something, huh?
AI, robots, and peanut butter sandwiches against glass.
Ooh, okay. Is that the title of another episode? AI, robots, and peanut butter sandwiches?
I think everyone would love that one for sure. Maybe next one, everybody. Stay tuned. Eric, you're the best, my friend. I love diving deep into these thoughts with you. You're a genius. I absolutely just enjoy it and respect it. And everybody out there, thank you so much for your time as well. We'll catch you on the next episode of Disruptance. Take care.
Thanks, buddy.